All right, you guys, we're going to take a look at Hedera now. It's been a while since we've done an update video for here, but let's take a look. So right now, Hedera is trading at 0.1898, so roughly around the 18 to 19 cents here. We are down just 2% in the last 24 hours in terms of price. Volume itself has taken a hit here, 31% down, and market cap just slightly at 2%. So quickly taking a look on the daily time frame here, kind of dating back here on March 10th, we're seeing this consolidation phase where price is coming down to an area of support and then just not hitting and breaking that resistance line. So what this tells me is that the bulls and the bears are kind of battling it out here. We're not really seeing a dominancy in here. And what's really interesting as we take a look at Hedera, this consolidation happens time to time here. We can see that price was consolidating back on December here, coming up to an area of resistance at 33 cents and then coming down to an area of support at 23 until we see this uptick in volume and we see this reach all the way up to that 39 cents, 40 cents itself. So the consolidation itself is just a temporary pause in the overall trend. And if we take a look at the daily time frame itself, the overall trend is still an uptrend. The reason why I say it's still an uptrend is that we have all of our 100 moving average at the very bottom here. And normally for me, moving averages, ignore that, is a good way to indicate what trend we're in. So primary trend here for me on the daily time frame is still an upwards trend. If we take a look on the weekly time frame as well, it is still an upwards trend. And then monthly time frame as well, we're looking at upwards trends. So it's only until price does break below our 100 moving average, we're going to see a trend reversal. And on the daily time frame here, it is coming close to it. But as we know, moving averages are treated as areas of resistance and as an area of support here. Now, quickly taking a look here as the consolidation phase, as it's kind of coming in closer together, we can see that the support area has been tested multiple times. So the support area here is solid. The more times that it's tested, the stronger that the support or resistance becomes. A few indicators here, if we take a look at our MACD indicator, again, this measures momentum. If we do see a cross of our K and our D line below here, we may see a shift in momentum. But again, keep in mind that these two lines are well below our zero. So it still kind of shows us that it is still a bear market in the daily time frame. It's only until we're able to break this area of resistance at the 20 cents, we're able to see Hedera kind of continue on. Going into the immediate short term for 4 hours here, again, this kind of solidifies the consolidation phase. The reason why I say that is our Bollinger Bands are narrowing and it's moving horizontally. Whenever it moves horizontally here and it's getting smaller, it means lower volatility. That means price is going to be moving fairly slowly. And when they move horizontally like this, it just confirms that the consolidation is going to continue here. So we're reaching up to one area of our resistance line, which is our 20 moving average and our 50 moving average here. If the candlestick itself kind of stays within this moment or this picture that we do see, it is kind of a spinning top candlestick, which does show some indecision in the marketplace. Now, take a look at this here that I just quickly saw. It's a gap in between these two candlesticks here. Gaps mean it's missed liquidity or lost liquidity. Price moved fairly quickly between these 4-hour segments, which orders were not being able to fill. And whenever we see gaps, it means we're going to fill it in the future. It doesn't mean that we're going to fill it immediately, but we are going to, the price is going to gravitate towards this gap here to fill it in. So that being said, if we're seeing some struggle to break above our 20 moving average, our 50 moving average here, then price may come back down, fill this gap area, which means price is going to come down and retest the support of 18 cents here. So that's something that I'm kind of taking a look at, and hopefully you guys watch out for, is that kind of 18 cents again to fill that area out, and a possible retest on our daily time frame of our 23% of our Fibonacci, which is around that 18.3. Again, if we're seeing some buying interest, a crossover of our MACD indicator on the daily time frame, then we may come up and retest this area of resistance at that 20 cents marker. But definitely let me know what you guys think down below. Thank you guys so much for tuning in. Like and subscribe, but I'll see you guys in the next one. Bye.